Great. Well, it's my pleasure to introduce my guest today, Mona El Isa, the co-founder of Enzyme Protocol and the CEO of Avantgarde. Mona, welcome.
Hi, great to be here. Thanks for the
So,
welcome.
so it'd be great to start off just like a little bit about your background, how you ended up in crypto, and then how eventually you ended up creating originally Enzyme Protocol, or originally Melon, then Enzyme Protocol renamed, and now at Avantgarde.
Sure, yeah. I come from a traditional finance background. I started at Goldman Sachs right after university. So I was 19 when I joined them on the trading floor. I was a market maker and prop trader there for nearly 10 years. So traded across the asset spectrum there, and then was hired by one of our clients at the time in early 2014. So moved over to work for a hedge fund in Europe, a large hedge fund in Europe, where I was going to be running a long short equity portfolio. Totally loved that, did that for about 4 years. And then I was approached by a family office. The family office wanted to give me some seed capital to launch my own fund. I was very excited by the prospect. I thought this is exactly what I had wanted to do for most of my career. So took the opportunity, set out to launch my own fund, raised another 10 million next to the 20, and launched a fund. It turned out that my dream actually turned out to be one of the worst years of my life. I had no idea, having come from two really large institutions / fund, how burdensome the operational and administrative infrastructure is in traditional finance. I was obviously as such a small sized regulated fund doing a lot of that stuff on my own, and was totally shocked to learn how inefficient the current financial infrastructure is. I mean, when we were at Goldman, we knew that there were floors of operational people in the firm, but we never saw them. We never had any interaction with them, and never realized, how much of the business relied on them, really. So closed down the fund after a year, returned capital to my investors. I was going to take some time out, and then a month into that year out, I discovered Bitcoin, and I was totally fascinated by Bitcoin. I just read an article about it whilst I was traveling, and then discovered Ethereum, and then was even more hooked, and then kept reading about Crypto Valley in Switzerland, which was where Ethereum did its token sale and where a lot of the early token sales were conducted. And I was fascinated by this place, and I decided, well, I'm free now. I'm not working, so I can get on a plane and go there. So immersed myself into Crypto Valley in end of 2015, beginning of 2016. Started to meet a lot of the early stage founders in tech, and wrote a lot of the pre-seed checks for some of the bigger companies today. But also started like networking with them and learning about the tech from them. I also mentored some of them, and long story short, took the view that the future of assets was digital. And if the future of assets is digital, we can basically re-engineer the entire asset management infrastructure to make it completely automated from an administrative and operational perspective. And basically, that's what I've been doing ever since.
So could you delve a little bit into, that's a good segue into what Enzyme is. So my understanding is that Enzyme is just a protocol that allows others, I guess, an efficient way for other people, say myself, manage other people's money and not have to worry about custody or auditing, things like that. So if you could describe a little bit about what Enzyme is.
Yeah, absolutely. So Enzyme empowers or enables anyone very easily to set up any kind of investment product, whether that's a fund. We call them vaults because vaults gives you a bit more flexibility. And that vault can be customized with different parameters. So the vaults are basically, you're basically customizing things like, what do you want your management fee to be? What do you want your performance fee to be? What do you want your compliance policy to be, if you want one? What do you want your minimum check size to be? What do you want, and you're basically just going through our super easy to use interface, clicking through these choices you have. It takes you like a minute or two to basically configure your vault, and then you can deploy it on chain. What's happening in the background is that all of these rules are talking to our protocol, and our protocol is helping you assemble the right set of smart contracts that will reflect the rules of your vault. One way that I like to think about it is the Enzyme protocol acts as the fund prospectus, and the blockchain enforces the rules of that fund prospectus. So you totally eliminate or largely eliminate the need for any financial intermediation through the use of our smart contracts and blockchain technology. And then on the flip side, obviously people can invest and redeem, and you get transparent real-time auditing, accounting. Your fees are calculated in real time. People can claim their fees, managers can claim their fees in real time. So, all of that operational burden is almost entirely removed.
I see. So as an aspiring asset manager, I go to your website, create a vault. And right now, my understanding is that it's just Ethereum related. My investable universe is just Ethereum ERC related tokens and, NFTs as well, I assume. And okay.
Yeah, so at the moment we can handle ERC20 tokens. So we have an investable universe of around 250 assets. Going forward, we will be including other types of assets, like NFTs, like CDPs, etc., which are a bit less standard, but will open up possibilities for things like leverage, real estate funds, art funds, or NFT collectible funds, etc.
Got it. Okay. So great. I create this vault, and inside that vault, I know that you have integrations with a variety of other platforms, Compound, Kyber, et cetera, et cetera. I would have to state what my strategy is. So like a long short or something, or market neutral or something like that, just for, I guess, for outside investors. And then under the hood, I can just manage, I take money and then I manage the assets however, I guess.
Yeah, almost. Yeah. I mean, it's true. You can, if you have no rule sets embedded in your vault, you can manage the money however you like, or the crypto assets however you like. Obviously you cannot take the money out into your own personal wallet, and there's obviously guards and protections against that. You're basically meant to, every time something exits the vault, something of a similar value should be coming back in. And so we track that quite closely, and the protocol is really trying to make sure that we always think, when we're developing the code, we're always thinking about, the interest of the investor as well. But there are more sophisticated things you can do, like embed much more rigid rule sets, like this vault is only allowed to trade this asset universe, or this vault is never allowed to trade with these adapters. For example, by the way, this does not reflect my view on these protocols at all. But if I were to say this vault has a blacklist on Alpha Homora, on curve pools, etc., then that means that the vault manager will never be able to trade with those protocols. And you might decide that, that's your firm's practice because you don't think that, maybe they have, by the way, but maybe these protocols haven't been audited and you're not sure they're production ready. So you don't want your investor capital being risked there. So you can create all sorts of rules. And again, the rules are written in the smart contracts and enforced by the blockchain technology.
Got it. So how, if I create a vault, and how can they be changed by the manager, or would I have to create a new vault?
The rules cannot be changed at the moment intra-release. Every time we release a new software upgrade, managers do have the option to change the rule sets or change the configurations. But in keeping with the promise of decentralization, obviously we are one of the first DeFi protocols in the space, investor protections are important to us. So there's two things we think about during an upgrade. The first one is we never force upgrades on people. They're always opt-in by the manager. The second thing is, when a manager does opt into an upgrade, the rules are not automatically enforced onto the investors. The investors have a 48-hour period by which they can redeem from the vault if they don't like the new terms. So if a malicious manager were going to, whack up his performance fee from 20% to 60%, and was hoping that people wouldn't notice, that won't happen in our system, because investors will receive, if they've opted into the notifications, they'll receive a notification saying, hey, this manager is signaling an upgrade. These are the new terms of the upgrade. If you want to, take no action if you're okay with that. But if you're not okay with these new terms, you should redeem within 48 hours. And that 48-hour period is also configurable. I just use it as an illustration.
Yeah, understood. And so they're receiving a notification through like an email or something like that? that's somehow linked to their MetaMask, or I'm just curious how the notification aspect works.
So we've actually never, so, Enzyme is still like, it's only been on the mainnet for for 4 months. So we haven't actually gone through an upgrade cycle. So we're actually building in the notification service right now, and it will probably be either email or SMS, or option between both.
I see, but what, not to get too in the weeds, but what if I'm a user and I don't want to give, I guess, am I giving my information in a completely
it's
way?
opt-in. It's opt-in. You don't have to opt into the notifications.
Got it.
Yeah.
It's opt-in. Interesting. Okay. You mentioned earlier that you call them vaults because they give a little bit more flexibility. I'm curious if you could elaborate on that a little bit. What do you mean by flexibility?
Well, okay, because like if you just say we're a fund management protocol, for example, I think you limit what, it limits the imagination in terms of what Enzyme can be used for. And also when people think of the word fund, they think of funds in a very traditional sense. There has to be a custodian, it's just wired. I've just we've been in the space for 5 years. People can't get out of that frame of thinking if you use a word that they know, from the traditional finance space. So they're used to saying, so who's the custodian? Who's the fund administrator? Where do I do this? And where do I do that? And are you connected with Kraken? No, because we don't talk to centralized exchanges, So in order to get people out of that frame of thinking, and in order also to let people imagine about the possibilities, Enzyme can not just be used for running fund-like structures, but it can also be used for managing decentralized ETFs or automated robo-advisory strategies or managed accounts or personal accounts or anything like that. So we just like to think of it as an asset management infrastructure. A vault is a very generic word. And, a vault also has very different characteristics to any of the financial products you would see in traditional finance. It's a non-custodial solution. Investors or depositors will always have full custody of the underlying assets. It's a totally automated infrastructure. There are no financial intermediaries. It's it looks quite different, even though the what is the same, but the how is very different.
Yeah. Okay. And so fees are charged, and just going to use like the classic 2 and 20 example, but I could set it to 1 in 10 or 1 in 30 or 50 bips and 40 or whatever, really. Are the fees paid in? So I create a vault, manage a strategy, and I set a fee. Are the fees paid? And let's say, does the vault have to take an ETH as capital, or can it take in, uni tokens or link tokens or something like that?
So your vault is denominated in a certain currency, and it can only take deposits in that currency. We used to have a flexible model where you could invest with any currency, but it becomes very inefficient from a software perspective. In a world where gas prices are relevant, we want to keep our code base as lean and clean as possible. Okay. So we actually changed that, and I think people are generally happy with it. But on the interface level, you can start with other currencies, and like our interface, in the background will convert that for you so that the user experience is much more seamless.
I see. So if I don't have, like, let's just say I guess most people would take it in a stable coin to start, but let's say I'm taking it in USDC, people could contribute uni, but on the back end, you're converting it for them.
Exactly. Yeah. So at the moment, like if you're starting with ETH, you can invest in any vault, as long as it doesn't have a whitelist. But yeah, that conversion just happens like in the background. So you have the option, basically. I have the denomination currency, and so I'm going to invest with that, or I'm starting with ETH, and we'll layer in other currencies as well going forward.
Got it. And then the fees are charged on, of course, the assets in that vault. Are they charged like block by block, or?
Yeah.
Okay.
Yes, so they accrue block by block. That's the beauty of blockchain technologies. You can see them in your interface, like accruing on a live basis, management fee and performance fee. Obviously, you can claim management fees at any time. There's no restriction on that. And on performance fees, you during the customization phase, you define a crystallization period. And so anytime, as long as like the condition is met that your crystallization period has passed, you can also claim performance fees.
I see. And so those fees are charged I guess if I was a manager and I was claiming them, they would get paid to me in that original currency that I denominated the fund in.
So actually, they get paid to you in shares of your own vault. So so you basically are, yeah. So you're basically like, we also mark if a vault manager is invested in their own vault because we see that as a nice alignment of interest. But yeah, so you get paid in shares of your own vault, and you can obviously sell those or redeem them. But yeah, that's how it works today.
I see. So you get paid in LP token, or sorry, in tokens. I guess LP tokens, or I don't know how you denominate them, but tokens in my own vault. So, VPSD, for example.
Yeah.
And those, sorry, I'm just working through it in my head. So those represent management fees and performance fees generated by that vault, which are fluctuating. They could increase, but they could also decrease because my performance could be shit. It could be great for the first 3 months, and then month 4, I could lose 60%, and then I'm giving back all the management fees, basically.
Yeah.
Okay.
So management fees are not dependent on performance. Management fees are charged irrespective, but performance fees, yes. If you haven't claimed them during the period where you were up on the high watermark, then yeah, you would lose them if you went back down.
Okay, so I get back these tokens. I have to claim them, get back these tokens, and I could immediately sell them for ETH or USDC or whatever, right?
Yeah, you could. Yeah. Yeah.
And what would be my incentive as a manager to not do so?
Well, Warren Buffett never did it. He kept reinvesting his earnings.
I see. So you're spinning up, I see. You're spinning up shares. I see. Got it.
Yeah. So, if you believe in you're
owning shares. Yeah.
If you believe in yourself, if you believe in your company and your firm or your group or whatever, it actually could be a really good thing to do. But obviously there's an operational cost involved in running things. And so you might want to take a certain amount out to cover your cost base, etc. Or you might, have a different approach, and you might have an LP a management company that sits on top of the vault or whatever, and do things a bit differently. But there's lots of different ways you could do it, basically.
Understood. And so are so the individuals as a manager, am I getting 100% of like the tokens of the pool, or are my investors getting some as well?
So you're getting basically, no, your new shares are being created in the right proportion to cover your management fee and performance fee. So it's almost like a little inflation is happening. And so your other LPs are slightly being diluted in order to make way for your fees, basically.
Got it. Okay. And then with the fees, and I know we're getting in the weeds here, but I was just curious, is you mentioned earlier that there's going to be a watermark. So that's set dependent on, the hurdle. Then I could set as a manager, right? It could be 6%, could be 10%.
Yeah, we don't have a hurdle rate embedded in there yet. It's something we probably will do in future. But at the moment, the high watermark just works like, it's the fund or the vault share price starts at 1. And then after your first crystallization period, there's a new high watermark snapshotted. And then that new high watermark will be the high watermark period that you're benchmarked across for the next period.
I see. Okay. And then I'm just curious if you thought at all about like how the performance is distributed. Like, is there a waterfall at all, or is that for future work?
That's probably future work.
Okay. Fair enough. So from a user perspective now, how do I discover managers? I have to go to the Enzyme protocol, I guess, and managers have to market themselves on Twitter or whatever.
Yeah, so most managers bring in their own networks of people at the moment. Although one thing we want to do on the app side is to improve the user journey and experience for investors. We see our app today, which is app.enzyme.finance, is basically the beginnings of a huge database for vault managers in crypto that are building on-chain track records that are provable, auditable, and on-chain, right? So we see there's a lot of value in that. But what we also see is users, really, they're a bit lazy. So they come on, to the database and they see 600 and something vaults. they don't want to spend their time filtering through them and, comparing and using the filters, etc. So where we're going in future is trying to until now, I would say we focused very much on the manager journey, and we want to now focus on improving the investor user journey. So, asking them a few questions on entrance, like, what are you looking to do, et cetera, and potentially directing them to investments that we think or vaults that we think are suitable for their needs.
I see. Okay. So I go to your website, find a vault that I like, and I would essentially get back like an LP token of that.
Yeah.
That represents my share. And then fees would get deducted out of my capital contributed block by block, plus the management fees. And then I'd get back, it would accrue as well, ideally, or it could lose value, I guess. Okay. And users need to, at the moment, users need to have some understanding of MetaMask or something like that, right?
At the moment, yes.
Yeah. But is there plans in the future to abstract this?
Yeah, on mobile, I think we're integrated with Coinbase Wallet, which makes it a bit easier as well. And there are definitely plans to abstract that almost entirely, hopefully, for users.
Okay. And as a user, I can redeem whenever I want, or is there like a lockup period?
So there used to be a time where you could redeem anytime you want, but as we start to as we start to integrate going forward, as we start to integrate more less standard looking protocols which have different nuances about them, the 24/7 redemption function it's less easy to make that promise. So what we like to say is, hey guys, if you want to have 24/7 redemption as it's like a big requirement for you, then if you really want to be investing in vaults that don't use X, Y, and Z, protocols, because of, for example, synthetics, for example, when you trade with synthetics, like the settlement time is 8 minutes. So, there's like there's a few edge cases where that 24/7 redemption promise might not always be valid. But then again, you could use, as a vault manager, if that was a concern to your LPs, you could add a risk management policy that says, synthetics is on the blacklist and we guarantee our investors 24/7 redemption. So there are ways around it. But, inevitably, as we go, deeper and deeper into integrations in DeFi, and not all DeFi integrations look alike, they're certainly starting to look less and less standard. Then, NFT is another great example. If NFTs are non-divisible, so you can't guarantee 24/7 redemption. You have to have a closed-end vehicle for X amount of years. Then say, I'm going to sell off these assets at the end of 10 years and return capital to investors.
Yeah, no, that was gonna be my next question about, because if there is 24/7, how do you unwind some of these things as they get more complicated? I assume like moving to layer 2 also makes things a little bit more complicated, right? Can an asset manager, if it's trading on, is it Optimism that has a 2-week lockup or something like that? That has to be factored in, I assume.
Yeah, I think, we're looking at layer 2 a lot, and there's a lot of different nuances that are going to have to occur with, depending which direction we go. But I would think that initially there might be some short-term, medium solution where, you can do something like that, or longer term, the right call might be to deploy a version of Enzyme on a different, on a layer 2 or on a different chain that's interoperable. We'll see if that, I think it's still very early days for these kind of things. I know that there's a lot of hype about them right now, but from our perspective, we think that it's a bit early to commit to, any one solution right now.
Okay. Yeah. And is there an easy way at the moment, or is this also for future work, for people to go in and see their performance, how they performed against maybe the aggregate of managers on your platform, and then just holding Bitcoin or Ethereum, and, maybe even just holding the S&P 500?
Yeah, totally. Like there's an app that gives you all the metrics you would want, like monthly performance, your metrics, your alpha, your Sharpe ratio, volatility, all the stuff that, your LPs would probably normally want to be aware of. And that's all automated. So that's all inherent in the app. And over time, I think those types of services will become much, much more sophisticated.
And so you mentioned earlier about a compliance policy, and that's interesting. I guess, what do you mean by compliance policy, and how is that enforced?
Just things like using a whitelist like for your investors. So like, creating a list of addresses that are allowed to invest in your vault. And then maybe, a compliance policy would be performing KYC, AML on them off chain before adding them to your whitelist. Or maybe, there's another reason you want to do it. So those kind of things I would consider compliance. Again, those are all embedded at smart contract level. So, that sort of ensures that only those people can participate.
And when you say like KYC AML off chain, that's like the manager would choose their own like third party provider or something like that?
Yeah. Or yeah, exactly. Yeah.
Okay. Okay. Yeah. That's so I guess, what about like, if I'm a manager and I'm terrible at my job, and okay, bad performance happens all the time. First of all, didn't work out. That's okay. But let's say I get to the point where I'm on like my fifth or sixth strategy, and there's a clear demonstrated track record of gross underperformance. Does Enzyme allow that person to keep coming back, or like, in a sense, is it totally open, and you're letting the market decide, or maybe that's future work? I'm just curious about.
At the moment, Enzyme is completely permissionless and decentralized. So yes, no one will ever stop you at an Enzyme layer. At the app layer, which is, it's kind of built and maintained by Avantgarde, then it is possible that we add filters or something, or maybe more likely verified ticks next to managers that have passed certain criteria or whatever. But that's probably more in the future work scope.
I see. Okay. And is there a minimum for these funds? Because I agree, it's a fantastic sign when a manager eats their own cooking, so to speak. Is there a minimum GP commit, or is it that's totally set by the vault and you're just,
No, it's totally set by the vaults at the moment.
Okay. Okay. I guess so, and then the Enzyme token, I imagine that fees accrue to token holders. I mean, of course, there's the governance aspect, but do fees accrue as well? Like a portion of the management fees is paid to the protocol?
Yeah. So starting in September, we're moving to an assets under management based fee. So managers will pay 25 basis points on assets under management. And then that definitely will accrue to the MLN token. So as those fees come through, they will eventually be converted into MLN and burnt.
Okay. And Avantgarde is my understanding is Avantgarde is the organization tasked with like improving the Enzyme protocol, maintaining it, or is it something else?
Yeah, it is. It's exactly that.
And so what do you see in terms of looking forward? What do you see? What are some things upcoming on the horizon, or things for future work that you're excited about that you think will greatly improve the protocol?
So in the short to medium term, we're working on our Sulu release, which is due at the end of September this year. We're working towards like including, so as you know, like as of today, the protocol can support AMM pools. It can support, so you can deposit into Curve pools, Uniswap pools, etc. You can lend, you can farm, you can do all of that kind of cool stuff. But one feature that we've had a lot requested is borrowing as well, and integrating with slightly less standard looking protocols. So we're doing that sort of infrastructural work and integrational work as well alongside. And then once Sulu comes, that will be a big milestone, another big milestone this year. And we will probably shift our focus more towards layer 2 solutions and other kinds of vaults with different properties and different value propositions.
I see. And at the moment, is like, this is a classic problem a lot of founders face when they're trying to build a platform. You have to build both sides of the, you have to build the supply and demand side. And I'm just curious, how are you going about, everybody's got a little bit of a different strategy, and I'm always curious about what founder strategies are for doing so. And I'm just curious what tack you've taken.
Well, I mean, in our case, like we just came out of a very tough couple of years. It might not have looked like it from the outside, but there was a big crypto winter for a lot of altcoins, where prices rock bottomed, and many of us earn our fees in our own token. So I think, from our perspective, there hasn't been much of the only market strategy for the last 2 years has been to build. So we've had our head down in what we saw as the crypto winter, building. And I think that positions us really nicely now to grow. And so all the growth that we've seen from January, assets under management have gone from nearly 0 to 110 million in the last 4 months. With a large chunk of that coming in the last couple of weeks. That is like a sign that, we've found product market fit, and now we're thinking very seriously about how to grow the team so that we've just brought in a chief marketing officer, Marina, this week, who many of you I'm sure will meet in the next few months or see on social media. And we're looking at how we can increase our efforts in biz dev. And we've also brought someone in who's much more operational, who will free up a lot of us to do what we were doing previously better.
Great. Yeah. And so just I guess a more philosophical question, and I think you alluded to it earlier, by using the vault strategy, it allows you to, I guess, diversify as a platform away from asset management. But I'm curious, looking forward, maybe 5, 10, 15, 20 years, do you think asset management, and I guess active asset management and the performance associated with those vehicles, do you think that follows what's happening in traditional finance, where, on the whole, most active management, generates pretty mediocre returns, I guess, at scale, when you have these huge funds? I'm just curious whether you agree or disagree with that, and whether you think crypto.
So I have a really strong view on this, actually. I think the reason returns are mediocre in traditional finance for active management is because the barriers to entry are so high. So the system, the infrastructure of the system today, it caters to it's the big funds that attract LPs, even if their performance is quite bad compared to the small funds, because nobody wants to be the person that got fired because they invested in the small fund with the high returns that that had to close because they weren't big enough to cover their cost base, etc. So there's just so much risk investing in sub $200 million funds today in the way that traditional finance is structured. So my view is that actually, with tools like Enzyme and Avantgarde, the app on top that we've built to support Enzyme, we massively empower the long tail. And it's kind of sad that the long tail is what I consider the long tail is anything sub 200 million. But by empowering the long tail, you allow them to grow more organically without having to shut down because they can't get above the crucial 200 million mark in the first 2 years of life. So they can build a track record with less pressure. They can stay alive during that critical 2-year period. And then they can start to really compete against the big incumbent funds. And I think a lot of big funds are probably feeling quite, we always talk about financial intermediaries feeling threatened by blockchain technology. But I actually think that another group of people should be scared too, which is the big funds, because over time, the return profiles, I think, on smaller to medium sized funds running on protocols like Enzyme will be will be much more attractive.
So I guess a follow-up question that I was going to have was that, what is because the fund administrative overhead costs and all that are great, auditing costs, et cetera. What is the threshold, I guess? Would you say 200 million? If you reach 250 million, then you're kind of off to the races? Or would you say, and like below 250 million is, even though it sounds like a lot of money, you're really, fighting tooth and nail to survive?
I'd say 200, around 200 million is the mark. Like when I was, when I had my fund 5 years ago, the constant response I kept getting from investors was either you need a 2-year track record or you need to have at least $200 million. Because if you're at least $200 million, then at least I eliminate some of the operational risk of investing with you. But it's like a chicken and egg situation. You can't get to 200 million if you don't have the 2-year track record, and vice versa. So I heard a stat once when I was at Goldman, and I didn't believe it. That's why I went into the fund launch anyway. But somebody once told me that 9 out of 10 funds sub $200 million fail within the first year. And I never believed it. I was like, that's nonsense. And I'm not going to be one of those people. Yeah. So, I obviously was very shocked when I was.
Well, I guess so. If your argument is you're going to lower the cost and overhead and time consumption it takes, et cetera, et cetera, et cetera, so these small funds can get noticed, outperform, et cetera, but as they raise more and more capital, they go from 50 million or 10 million, 50 million, 200 million, 800 million, 5 billion. Won't returns over time, even if they're amazing? I mean, all these people are smart, right? Like they're really smart, but it's just because once you reach $1 billion, 5 billion.
Yeah, sure. Yeah. Every investment strategy has a capacity, right? So, yeah. And what you tend to see, I see this through the eyes of my husband a lot because he runs a fund of funds. So you tend to see, as a lot of managers, when you first speak to them, they tell you my capacity is, $500 million. Yeah. And then when they get to $500 million, they start saying, "Oh, actually, I think I can make a bit more room." And our new capacity is $1 billion. And so, like, people are very disciplined about. People tend to be very not disciplined about how, what their capacity is. So, it's a common. It's very common to see people like changing the marker a lot.
Yeah, when I was working in finance, we would always view a trend at, like, to that point, when someone said no, we're full, we were like, oh wow, this person, because certain people, we were probably different than others. We were looking for funds sub 1 billion, and we'd frequently come across people that were just like, I'm full, and that's typically the mark of a really good, investor who's understands, who's not in it just to grow assets to 5 billion, collect 2% on 5 billion, do that for 3 years, and then they're set. Anyway, that's interesting. But I guess, you mentioned earlier with the vault strategy and how it allows more flexibility and allows others to think outside of active management. People could do a fund of funds, people could do, of course, a mutual fund, an active strategy, and of course ETFs and things like that. What's interesting is, I guess, we don't view in the legacy world, there's things like bond funds and things like that, but I guess that would be, in this crypto world, what would you say a bond fund might look like?
Yeah, I mean, it can be done. I mean, we're starting to see the first bonds created on chain. So yeah, totally. Why not? I mean, we can handle anything at the moment that has today we can handle anything that has a token representation on Ethereum. But tomorrow we'll be able to even handle other types of different looking assets. But I think a bond could easily take an ERC-20 form.
Yeah.
So.
How, I guess now that I'm, one question that popped into my mind is another popular protocol for creating your own baskets is SET. And so I'm curious, I think I know the answer, but I'm curious in your own words, how you would say SET is a different product or service than, what Avantgarde is.
I think that SET has put a lot more emphasis on launching a product. Like most of their asset base today is their own product, which is DPI. And they haven't focused so much on building out infrastructure from what I can tell. And another difference is I think they focus more on passive management versus active. I think on our side, our play is we're not looking to do product anytime soon, at least. We're focused on building the best asset management infrastructure in DeFi. And I think that's what we are today from a functionality perspective, from a efficiency perspective, from, I mean, there's nothing that comes close to what Enzyme can do today in DeFi. We are also not restricting ourselves to active management or passive, we are just infrastructure.
And, at the moment you're building the base layer or improving the base layer protocol, your hope is that other people will come in and build other types of services or products. Is that right?
It's already happening. So, we've seen an insurance protocol leverage Enzyme for its asset management component. They're actually our biggest user right now. So they take up a large chunk of the $110 million. We're soon going to also be supporting quant strategies. I think I'm not supposed to say by who yet, so that will be public soon. But those are not live yet today. And we're in talks with a lot of other parties. We're like, serious parties who we think, we like the team. We think they can be very successful on Enzyme. And so we will support them and provide services to them to help them be, the best, perform the best they can, perform best in a holistic way, not just technology-wise, but if we can make introductions or be helpful to them, then we're always game for that.
I see. And so with the insurance protocol, they're using your platform to invest the float?
Yeah, so not exactly the float, or not only the float. Unslashed Finance is the insurance protocol that is now quite a big user of Enzyme. They're actually still in beta, but they're going to be launching very soon, any day now. As you know, like insurance, the way insurance works is you usually deposit. There are underwriters of insurance, so people have underwritten collateral, and the Unslash protocol also facilitates the purchasing of insurance on certain protocols. So the thing is that collateral needs to be callable if there's ever a payout or a claim to be made. But in the meantime, it's kind of silly to sit there idle, not doing anything. So what they do is they leverage Enzyme for their asset management needs. They try to, in a risk by taking a risk managed approach and diversifying their pool of capital, they basically earn yield on that so that they buffer up the capital and also provide more yield for the people who are providing collateral.
I see. So I'm not sure how Unslash works, but I'm just going to make some assumptions about it, that it's like decentralized and people have to vote on this. So be up for a vote. We're going to use Avantgarde to invest in a Yearn USDC vault. Sorry, Enzyme. Sorry, in a Yearn USDC vault. I think it's last at 7%. As Unslash token holders, we would vote on this, yes or no. Great. Then you're just the Enzyme is just the basically implementation layer. The multi-sig holders, I guess, maybe it's 3-4 people, would go use Enzyme as the implementation layer to then in turn take that capital and put it in a Yearn vault USDC.
Yeah, correct. If it was a Yearn vault, yeah.
Okay, interesting. And then the fees paid, well, in this case, they would probably charge 0, right? Because they're managing capital, but they'd have to pay the Yearn fees, of course.
But they get the transparency, the accounting, the connectivity to all the DeFi protocols, if they wanted to open up their vault to third parties, they're doing, collateral management, they're earning yield on a big pool of capital anyway. So if they wanted to open up to third parties at a later date, they could totally do that.
I see. And so, okay. And so, because it's a kind of, at the moment, it appears that it's kind of a big problem if you're a DAO and you have a huge pool of money, $50 million, $100 million in the DAO. How do you manage that? So I guess it appears to me that Enzyme might be a great way for DAOs to, of course, vote on it internally and then use those funds to, you would invest, risk-free securities like USDC, Yearn Vault or something like that. But is that also, that seems to be like an interesting use case.
Definitely. And actually there's a one problem in particular that we've identified, like a lot of DAOs have, that we're working on a very exciting solution for that, which we'll be announcing very soon. But yeah, I think it's a great treasury management tool for an individual DAO. but potentially also for DAOs collectively working together as well.
I see. And they would have to pay some fee to the Enzyme protocol.
They would have to pay the 25 BIP fee, starting September, like anyone else. But, unlike, if they were to do a lot of their strategies using our tool builders, they could potentially create Yearn-like vaults on Enzyme, but without paying the 20% fee and 2% management fee to Yearn. Because like a lot of the tools that we provide allow you to replicate similar type of strategies.
I see. And then they can tell, if I'm an Unslash DAO token holder, I can go to your platform and see how that the assets are there, that we're getting 7%, that et cetera, et cetera, et cetera. It's all clear if I'm just, a curious holder.
Exactly. Yeah.
Okay. That's interesting. Because it's a problem that's becoming bigger and bigger. That's interesting. What kind of so you've already mentioned that some people are already building products and services on top. What are some of the things that you'd like to see be built?
I'd love to see a governance layer being built on top of Enzyme so that people could whole communities could basically create their own token on top of their vault and then distribute it as either incentive fees or governance fees or any of the above or all of the above. And that's one thing that I'm personally really excited about. I'd love to see, we've seen Quant now, or I've seen Quant being built, like it's not public yet. And we've seen insurance. I'd love to see other use cases like venture, like, big ETFs and stuff like that being built on Enzyme. And I think we're still waiting for the big, kind of superstar active manager to come to Enzyme one day. I'm sure it will happen in the near to medium future, but I think that will be a very exciting time as well.
Do you see speaking of how Numerai is, I guess they're aggregating people to use data models. That's then investing in the S&P 500 or public stocks, right?
Yeah, as far as I know, it's S&P. They might have opened it up to 1 or 2 crypto tokens as well at some point. I forget now because I haven't looked at them in a while.
Yeah.
But yeah, that's what they were doing initially.
But we don't know the return, so we actually have zero idea if they're good or not. But do you see them potentially as a user of Avantgarde in an ideal?
Yeah, it could be. Yeah. It's definitely a conversation we could reignite with. I mean, I think it's Richard and I, we did meet a few times like a long time ago, and I think it was too early for us to have that discussion back then. But yeah, it's a different situation now, so that could be very interesting. But I would also say that there's a lot of it could be interesting. Sorry, I'll just stop there.
No, it's all good. Yeah. By the way, just want to remind anybody, if you have any questions, just jump them in the chat. I forgot to say so earlier, but I just wanted, with the last couple of minutes, I wanted to ask, because we interface with a lot of early stage founders, some of them are first time founders, and you have an experience dealing basically with 2 startups, with your fund and now Enzyme and Avantgarde. What are some, best practices, lessons learned that you would take from those 2 experiences?
I think, there's a cliche one, which is hire slow, fire fast. I think that's everyone knows the theory, but how many people actually put it into practice? And I think that for me, first time round, was very hard. It's hard for 2 reasons, because when things are busy, you just want to hire really fast, so the temptation is to do that. And also when things are not working out, you're sort of, it's common problem to go into denial about it. But, I think, I am very good at that right now, in terms of identifying problems quickly and fixing them and taking our time, even though it's very painful to go through, a 3-month process before you hire someone. But, at the end of the day, I think it works out. So I'd say that. I'd say, with my fund project, which was a long time ago now, I would say also having done a lot more diligence upfront about, I'd heard that stat, 9 out of 10 people fail under 200 million. but I just dismissed it, and I was like, I'm not going to be one of those people. And it was a bit, naive and stubborn, I guess. And I think having done a bit more due diligence, going to people who had actually launched funds and asking them in detail, what was it that was difficult? Why was it difficult? What did your general day look like? How do you, and I think that I just assumed I'd turn up and everything would like work seamlessly like it did at Goldman. And yeah, I mean, it was, in hindsight, it was a great lesson for me that I went through that, because it understanding how the engine of asset management works is only possible because of that experience. And I think it adds so much value to what I'm doing today. So, it's all experience at the end of the day. All founders make mistakes, and that's okay as long as you learn from them.
Yeah, you learn by doing. We're big proponents of that. I guess quickly on a team, because this is something I come across a lot when I speak to early stage founders. They're like, oh, well, I'm not sure if we have enough money because I want to hire people, and and so, my response is like, well, one, you have your equity, and that's the way you're going to be incentivizing people. Like, you can't expect to offer someone who's getting paid 150,000 or higher, or even 100,000, when you're just starting out and you're a 2-person team. So what would you say to those founders that are worried? Like, do you have to find that right sort of person to make that jump to believe in your equity? Or if that makes sense what I'm asking.
Yeah, I'm smiling because I know the problem, and I've seen it before, where people who don't inject their own capital into a business don't appreciate the value of equity. That's the problem. They think it grows on trees, and they don't appreciate how. Even I didn't appreciate how valuable it was until the crypto winter, because the first time round we didn't have to raise money. We did a token sale, so that it didn't seem as relevant. I would say in hindsight now that. It's really important to explain, don't assume that people understand the value of equity. Like, sit down and explain to them what it means and why it's so valuable, and how, like, every time you raise a round, you will be diluted. And, so it is scarce. And, being early in a company means you could have a big part of that pie. It sounds like obvious, but like, honestly, taking the time to explain it to people. And if they still don't understand it, then honestly, I would question whether they're the right people to work with you, and if they really do have that startup mentality. I would say if you have some kind of funding, then one mistake I made in the past is giving high salary and high equity, and that's just a no-go for me. It's either it's either low salary and capped plus high equity, or the other way around, and like the two shouldn't come together unless the equity component is being subsidized by capital injection.
Yeah, no, that's good advice.
Very easy to like undervalue it when you don't have anything at stake.
Yeah, no, of course. Yeah. Yeah, no, that's great. I guess we did have one question come in to change tack just a little bit. The question is, what's the biggest risk to Enzyme's future? Is it something regulatory? Thinking of a world where Enzyme scales up big.
I don't see regulation as a problem to Enzyme, because it's like actually so well designed to adapt for compliance and regulation if that were to become a problem. It's designed with compliance options. It's designed with, risk management rule sets that don't exist anywhere else in DeFi. So I don't see that as a problem. Maybe what I would see as a problem is security. We take security very seriously. We audit continuously. So far, we've had a very good track record at that throughout our time in the space. But yeah, that's the thing that keeps me up at night. We want to build a secure track record. A couple of years online without being hacked isn't enough. I think we need a lot more than that.
Yeah. Okay. With the last 2 minutes, the last question I would ask is, how can we be helpful as a community? If you're a listener, how can we be helpful to Avantgarde, to Enzyme? Yeah.
I think, I think if you know anyone who's interested in, or if you know anyone who's suffering from problems that we're trying to solve, we'd love introductions. If you have any ideas for us or whatever, I'm sure that we're plugged in here to a very, some very kind of strong mind share in this group. So, if you have ideas or suggestions, would love to, discuss them offline. We're very easily approachable on social media or in our Telegram channel. Always keen to meet community. If you're interested in learning more about Enzyme, I would say, learn by doing is the best way. There's great documentation online and the app is easily accessible. That's, and your feedback, after using the app is always much more valuable than pre. So.
Great. Well, Mona, thank you very much for taking the time to chat today. It was great to learn more about your journey and dig in deep as to, what's going on under the hood at Enzyme and Avantgarde. And I look forward to the future